Hello, this is Michael, stock analyst with Long Wealth Capital. Today is Sunday, September 14th, 2025. On Friday, the SPY closed at 657.41. And today we're looking at Amazon. Amazon ticker symbol is AMZN. It closed on Friday at 228.15. So the reasons I'm looking at Amazon is, one, it's a market dash opportunity. The other is it's trading just above its 50-day moving average, and it's currently at a little bit over a 15% discount to its estimated intrinsic value. So just an overview of the pros and cons. So first, looking at the cons, it has continuously increased its outstanding shares over the last 5 years, as you can see in this chart, which overall, over time, reduces share price value. Currently, it's only trading at a 15% discount to estimated intrinsic value. Normally, we would prefer that to be higher, and potentially it might be in the future. We'll see. And also, keep in mind there is a risk here that the next earnings release is in a couple weeks after the market close on October 28th, 2025. Although Amazon last quarter earnings in late July beat expectations, they provided cautious guidance, which caused the share prices to drop. Pros: the share price is trading around the 50-day moving average, and oftentimes that provides support and a potential move in the price higher. Starting with a smaller initial quantity, entry position could provide a fairly quick 3 or more percent gain, as the share price could trade up higher as we approach earnings in the next couple weeks after the close on October 28th. There's a huge amount of hedge traders with over 10% of their portfolio in Amazon, but recently Bill Ackman opened a huge new position of $1.2 billion, which is 9.3% of his fund, and David Tepper with Appaloosa increased his position significantly to $592 million, which is 9.19% of the Appaloosa fund. So as we've discussed before, you can manage your risk by limiting any one stock to less than 4% of your total portfolio, being patient with a lower initial entry price, and plan to take partial or full profits anytime your position is up 3 to 5%. So this is just an example of dollar cost averaging using a 4% position out of account size of 250,000. So looking at the volume price areas in the 50-day moving average, I recommend an initial position of 10% at the 50-day moving average of 226.5, adding 20% if it drops a little bit, a couple percent to 223.55, 25% at 213.8, 25% at 206.5, and the final 20% at 188.35. Our exit point is 235.1, and I'll show you that here on the graph, on the chart in a minute. There are volumes areas of resistance up at 234.6 and 237.4. Okay, so going to the graph, you can see the Fibonacci retracement from a recent low at 234.12 and a recent high up here at 238.85. You can see from that 238.85 it's dropped down, and it almost reached on Friday it almost reached this 50-day moving average about at 226.8. And you can see here the area of resistance up here, volume starts about 235.25. So the initial recommendation is to start an entry point right here about 226.5, right about the 50-day moving average. 223.08 is right here just above the 61.8% Fibonacci retracement. Let's see, 206.15. 206.5 is actually down here just below the recent lows. And then 188 is down further at the lower area of support. Again, reminder, the big risk is after the market close on October 28th is earnings. So, as it moves down here and may hit this 50-day moving average, it's possible leading into earnings it could build up and provide a quick 3 or more percent gain. It's also possible whatever events are happening this week with the Fed meeting could make some volatility, and the price could drop down to our 223 level, and it may continue below. There is some volume areas of support down here, but at 213 I've got another entry in case it were to get down here. But again, the risk and the concern is earnings on October 28th. So if you want to be ultra cautious, you could wait and see what happens with earnings first and see if that provides a lower entry level. Right here with the 50-day moving average, if we trade down here and get a smaller initial entry position, it could build up 3% leading up into earnings and give us a quick exit. And that's why I've lowered the initial entry a little bit and put one a little bit further down to start dollar cost averaging in just under the 50-day moving average here. Thank you very much.